And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It's the middle of July, 2025. Hope you're having a good day. Oh, by the way, it's Tuesday, and it's the 15th. Again, hope you're having a good day. Hey, ladies and gentlemen, this is serious talk on everything that affects you. And today, we're going to show you our technical analysis prowess. Say that 3 times fast. We are going to show you our technical analysis prowess because we are letting you know, and we always have to put the word in front of it, potential changes are now happening in the markets. And we say that knowing we're now running and into the midst of earnings season. What you need to know is that we do a lot of what we call intermarket work. What would that mean? Well, the easy way to explain it, if oil prices skyrocketed, you're probably going to see airlines and cruise lines drop in price. That's a for instance. If, for instance, the 10-year yield, which had closed at 4.489, went to 7%, what's the worst areas to be in? I would suggest housing-related, intermarket work. And part of that intermarket work and the cause and effect is just that. Interest rates, currencies. Now, we don't talk currencies a ton, and you know the reason why? Neil Cavuto, one of my favorite people on earth that we miss so much not being on TV, once said to me, we don't like talking about the dollar because it'll put everybody to sleep. Makes sense. But every now and then we got what we call a sore thumb. And we're going to tell you about it in just a moment. Now, as we said, serious talk on everything that affects you. We'll do the markets, the economy, your job, your industry. Mistakes that are being made by this president of the United States. And that matters a lot. Remember, that matters a lot when you have an active president consistently and constantly doing things, saying things. That matters a lot. We'll get into that too. And if you do not get and don't start with the TDS, we love a ton of things that he's been doing. But economic-wise, we got some problems. If you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our Twitter feed. Excuse me, I got to take that back. We'll post it on X, that used to be Twitter. And if you don't follow us on X, you should. And if you'd like to email us, just be nice. And I do believe we're on the YouTube channel of Biz Talk Radio. Also, at least somebody told me that. I had no idea. Nobody at Biz Talk told me that. Wish they did. Anyway. So the Dow was down 436. The S&P was down 25. Only 25. The NASDAQ was up 37. The NASDAQ 100 was up 28. And the SOX was up 71. All three off their highs. But pretty darn strong were the semiconductors today. And we'll explain why in a little bit. Now, our screens are set up. I have this middle screen. I call it the stuff screen. We call it stuff. Why? Let me tell you what's on that screen. You have a whole column of retailers going from Abercrombie & Fitch down to Zumiez, alphabetical order. We have defense stocks like General Dynamics and Raytheon. We have the managed care stocks that have crashed because of United Health. We have a bunch of drug stocks that are not doing very well. We have auto dealers, and they're all together. We have the two payroll companies, ADP and Paychex, have about 50 or 60 oil stocks. We've got a column of housing names, the whole transport index, all the airlines. We have the farm machinery. We have the big biotech. We got cruise lines, a bunch of medical products and research and crap like that. Another column. We have the food, beverage, tobacco column. We have about 30 to 40 insurance stocks. Got about 15 restaurants. We have a bunch of about 40 economically sensitive names going all the way from, let's see what I got going there. How about Autoliv all the way down to XPO Logistics? We have the whole financial column. Big banks and big regionals. Got about 80 to 90 names, and we also have a semiconductor column. And then we have little columns of 3 casino stocks. We have the metals and mining also, from Alcoa all the way down to Worthington Steel. My screen of stuff today is beet red. On top of that, as I did a glance at it, and I'm pretty quick with the fingers in scanning, you got some things topping, possibly breaking down, giving back. And remember, this was an area that just a couple of weeks ago had woken up. It was relatively weak, woken up. Not so sure anymore. So let's do cause and effect. Okay. And we're going to include the President of the United States with this. The 10-year yield, that is your mortgage rates. That is your a lot of loans. That to me is the end-all be-all. And why is it? Because if you have followed us, followed me, listen to what we have had to say throughout the years. We have told you it is the most important force in the market. We nailed it for you. We nailed inflation for you and the bear market for you because yields spiked while the dummy Powell just sat there and Yellen sat there and Biden sat there and their doofus economic guy, I forgot his name, were telling us there wasn't any inflation, and then when the numbers started coming out said don't worry, it was transitory, then oops. Well, the 10-year yield led the freaking way. And they had to play catch up. The Fed had to play catch up to yields that were spiking because they stayed at zero because they're dummies. Remember, they used to predict. Now they're into gotta wait for data, data dependent. And in the last 2.5 weeks, it's gone from 4.2 to almost 4.5, which is not the end of the world. Not at all. But there's also something else. Our dollar against other currencies have been in a bear market since, well, I'm going to call it the end of December. How do we define bear markets? Well, if you follow what we do, you'll know what we mean by bear markets. Price, the dollar, kept dropping and dropping and dropping. And every rally was contained by a dropping, descending 50-day moving average. Today, for the first time since the end of December, that dollar, and it's the UUP, broke above the 50-day moving average. Now, does that mean it's going to continue higher? No, but in real time, it did. And why is a stronger dollar a problem? Because in case you don't know, A stronger dollar is not good for our big multinationals because our American products become more expensive to foreign buyers around the world. And then you add in this tariff crap, and you have a little 1-2 punch, which could be a problem. And the question is the dollar strengthening because yields are going up? Or are yields going up because the dollar's strengthening? Typically, the dollar's strengthening because yields are going up. And if yields keep going up, the dollar will get stronger, and those multinationals will come down in price, and we'll have some trouble. If interest rates keep going up, what's going to be affected? A lot. And that's why they smack the smithereens out of the housing and housing related, like Home Depot and Lowe's and Whirlpool and the like. Up next, what does the president have to do with this? I hope you are listening. I'm Gary. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. So, what was our biggest complaint of Jay Powell? He did not listen to the markets. It was easy for us to warn you back then, 21, 22. It was easy because we believe in the free markets. The markets are very smart. They're very smart. And back then, yields kept going up. The free market, not Jay Powell. He controls this stupid thing called Fed funds. You can go look it up. I've given you the definition. I think I gave it to you yesterday. And believe it or not, for a change, Jay Powell's actually saving Trump's arse. Because if he lowered interest rates too much right now, there is every chance the market, the free market, would give that a big, gigantic middle finger. And while Jay Powell's lowering his Fed funds, the 10-year yield could spike. Why would that be? Because the Fed would not be listening to the market. And the market itself is much bigger than them unless they are printing money like they did to $9 trillion. So where does the president come in? And just so you know, everything I'm about to tell you, if I had his ear, I would say to his face to help him out. And of course, the problem is he thinks he's omnipotent. Every decision he makes is right, and that's a huge problem. President Trump wants to take the Fed funds rate down to 1%, while the free market is saying the opposite, at least in the last few weeks. And in case you don't know, the 10-year yield for since last November has been between 4.2 for the most part and 4.6. One visit down under 4.2 that came right back up, and one visit above 4.8. So 4.2 to 4.6, that's the free market. Not somebody with Fed funds, not a president of the United States. Yet the president of the United States want to take Fed funds to 1%, and let me tell you what that does. It incites higher rates. Because at that point, the free market, the big smart geniuses running the bond market, and they are smart, will recognize that the president of the United States doesn't have a clue, is wrong, is not listening to the market. And when you get too easy with money, when you shouldn't be, the opposite happens, and that 10-year yield would spike. And if it stays up and they don't fix it, and they don't react to it, there comes your contractions, there goes your inflation, and then all hell breaks loose. Unfortunately, this president of the United States is into easy money. Easy money is stupid. It creates distortions. The free market kicks that easy money in the teeth when it does not want it to be easy money. It did it before with Powell. I promise you it will do it with Trump also. The president has it completely wrong at this juncture. That can change. But right now, interest rates, real rates, the free market of investors, traders, and speculators that are risking their capital on what they see and what they feel, and they're pretty darn smart as a whole, says the Fed needs to be in and around here. And I can promise you, if the 10-year yield goes higher, we don't know what the short term brings. I don't know what tomorrow is going to do. But if the 10-year yield goes higher from here, if the dollar, which looks like there is a chance here that it is bottoming, goes higher, yet Donald Trump keeps saying we have to lower rates, and now they're making a fake investigation to get rid of Powell so we can put one of his peeps in to do his bidding, which sucks. And I watched a supposed conservative Republican today on TV say the Fed should not be independent. I almost threw up. I'm not going to say who it was. All of a sudden, conservative Republicans are now a bunch of doofuses. Why? Because if they say anything against the president, they get excommunicated. So we're letting you know that cause and effect today, yields in the dollar. We don't know what tomorrow brings, but if yields keep going up and the dollar keeps going up, I think there's going to be some headwinds. And I can tell you those areas that woke up very nicely a couple of weeks ago, some stronger than others, tucked in like frightened turtles today, especially the housing and housing related. Whirlpool, Sherwin-Williams, Home Depot, Lowe's, Williams-Sonoma. And then there's the actual housing stocks. Transports. Why would transports get weak? Well, if interest rates go up, cost of capital goes up. That's how it works. If anything changes, we'll let you know, but you're on notice right now. We're not calling for a bear market. We're not calling for big trouble. We're just telling you we think some of these areas now in the midst of pulling back, and we'll let you know if it worsens or it's just going to be a normal pullback. Well, for some things, it's already more than normal. Now we're in the midst of earnings season. Citigroup was up $3 today. But BlackRock was down 65. And State Street Bank was down 8. About 7% completely breaking down. BlackRock completely topping. But Citigroup, not bad. JP Morgan on earnings was only down 2, so that's okay. Bank of New York was hardly down, so that's okay. It was better. Tomorrow, there's a bunch of more. There's Goldman Sachs, Morgan Stanley, and others, and we'll have those for you also. But we're just letting you know. Little bit of cause and effect today with the dollar and yields, and my stuff screen is beat red today. On the other end of that spectrum that I need you to know, there was news that President Trump, after meeting with the CEO of NVIDIA, changed his mind. What did he change his mind on? It was important. I'm Gary. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. So it should be obvious that not only is the CEO of NVIDIA brilliant, but he's skilled at selling. Because after meeting with the president changed his mind on restrictions on selling NVIDIA chips to China, which is huge. which opened up the door for the semiconductors today. By the way, the SOX was up 72 today, even with the Dow down 436. At one time today, the SOX was actually 57.91, another 7, was up 144. But of course, with the Dow dropping 436 came in. NVIDIA was still up $6 today. The SMH, which is an ETF, was still up almost 2% today. Was better, but came down towards the end. But you had other things, other names like AMD up 9, Broadcom up 4 and change, Taiwan Semi up 8. They report this week. So the semis had a pretty good day, and that was holding up the Qs all day. The Qs finished up 50 cents on the day, which is quite amazing. Quite amazing. The S&P, which did finish down 24, happened towards the end of the day on the last drop in the market. And the reason why the S&P wasn't worse, because the S&P has a lot of tech. And by the way, in tech today, it wasn't just semis. There were a few other things that were up on the day, though other things got smacked around. So notwithstanding earnings, which changes some playing fields, big picture has a chance of changing today. Notice the words. Listen carefully to my words. Potentially has a chance. Nothing's baked in the cake until trends are happening. This is something that potentially changes some of the trends, at least for today. I can promise you they did some damage today on the things that are affected most by yields going higher. And the more the president keeps saying we should be at 1%, I think it becomes more and more a problem. After all, head honcho, top dog, big cheese. And unfortunately, there ain't nobody in his purview that's going to even argue with him. His people are a bunch of wimps. They're wimps. I'm waiting for one of them to say, Mr. President, that ain't going to happen. Unfortunately. What else do I want to bring up today? Well, I mentioned the semis. China. Very good action in China today. I don't know if it has to do with the fact of what that news about China and the chips, whatever. But just letting you know, if you look at FXI, chance of breaking out. Alibaba and Baidu, which was comatose, really woke up on volume today. I'm still agnostic on this area, but there's like a new high in TME. Is it a new high? NetEase is close. FUTU's been strong. So there's some China names that are perking up, for lack of a better word. And we'll see what comes of that. As you know, I always watch Alibaba, and that was up almost $9 today. We'll call it about 8% at least. 8.09%. Not bad. Not bad. Anything else that stuck out? Not really. Advanced declines were bad today, 3-to-1 negative. More on the NYSE, worse than 3-to-1. And you don't want to see too many days like that. The mid caps and small caps sucked today. And as we have said to you daily, the large caps just continue to be stronger than the mid and small, even though the mid and small came up with because the market bottomed. But on a relative basis, just ain't happening. And you can always diversify and have some terrific, but we're just letting you know it just ain't happening. And Bitcoin pulled back pretty decently today also. Looked to be about 3% for whatever reason. Remember, I don't understand anything about it. No earnings, no sales, no product, no services. It's just people buying at a higher price based on who knows what. And nobody can argue that point, by the way. And as I'm looking around my screen to see if anything else is sticking out like a sore thumb, no. I think that is about it. Which takes me to some noise today that I need to bring up that affects you. So there's I'm pissed off at the Republican Party and Trump for the great, big, beautiful bill. They got it right. It is big. Nightmarish debt and deficits going forward. Even though for the month we had a surplus because they say the tariffs, which I want to throw up about. I saw somebody today on TV applaud the tariffs and lie about it, or just a doofus. I saw somebody on TV today that had the nerve to say tariffs have money flowing into the United States. So let's assume he's not lying. That person's an idiot. Tariffs are specifically paid by the United States companies. By definition. That's it. So no money flowed into the United States. And by the way, I'm quoting this doofus. I can't believe. And the guy's got this big title. He's CEO of some company. Tariffs have money flowing into the U.S. No, it ain't. By definition. Now, as we have stated, hey, Walmart can go to China and say, listen, this whatever 30%, we can't deal with this. We need your help. Let's cut it down the middle. You're 15. So in that case, China would pay to our treasury. But that's not the definition. That's not real world. And that's certainly not real world for small companies that can't negotiate like a Walmart can. So be careful of what you're hearing out there. There's a lot of crap going on. And then they were talking about debt and deficits today. Little comedy act. I saw Chucky Schumer on TV complaining about the Republicans and their debt and deficits. Chuck Schumer is ground zero for about 30 to 32 trillion of our debt and deficits. That's how long he's been in D.C. Yet he has the nerve to go in front of a lectern and start complaining about the other party about the debt and deficits. I'd like to debate his butt one day. I'd have him crawling on the floor by the time I got done with him. And that was a little bit of the noise I saw today. They all nauseate me at this point. They all suck at this point. And amazing to hear a pundit come out and say tariffs have money flowing into this country. Yeah. Flowing into this country from this country. Doofus. Anyway, and by the way, I'm not even riled up. I'm just telling you the facts. So let's see what tomorrow brings. I'm very much not thrilled by the dollar and that move. There's this thought process, well, strong dollar, good. Well, yeah, a strong dollar's okay. But not so sure a strong dollar in unison with interest rates going higher while you have 37 trillion of debt is a good thing. Lastly, before we get into some other things, tariffs. Just letting you know. This is August 1st. We'll see if he does the taco again. The European Union, 30%, Brazil, 50%, South Africa, 30%, South Korea, 25%, Bangladesh, 35%, Kazakhstan, 25%, Philippines 20%, Cambodia 36%, Indonesia 32%, Myanmar 40%, Sri Lanka 30%, Malaysia 25%, Thailand 36%, Moldova 25%, Canada 35%, Mexico 30%, Bosnia 30%, Algeria 30%, Tunisia 25%, Brunei 25%, Serbia 35%, Japan 25%, Libya 30%, Laos 40%, Iraq 30%. All products that come from those places That's what we're paying. Yay. Up next, visionary minds. This is the one only Investor's Edge. We want you to remember a couple of things about the media reporting. They will never give Trump a fair shake. Just remember that. When he does great, it's bad. When he does bad, it's a horror show. The word Hitler and Nazi is thrown around all the time. Just want to let you know. Also, places like the New York Times are Jew-hating, Israel-hating, democracy-hating ass clowns who actually are being nice to this communist that may be the mayor of New York City. I may have told you this, but just in case I didn't, the New York Times wrote a headline and a big expose on Netanyahu runs Israel. How Netanyahu prolonged the war in Gaza to stay in power. That's the freaking headline. And then they threw in this whole thing with 100 sources that were unnamed. This is the paper of record that just made it up that he wants to prolong the war. When you have Hamas still holding hostages from, it's almost going to be 2 years, murdered in some of the worst ways, raped women in some of the worst ways, paraded them around, murdered infants and elderly, burned them, beheaded them, kidnapped them and kept them in the worst way in tunnels, not feeding them, torturing them. And now Hamas is killing Palestinians left and right. It's on video, and the New York Times won't even report it. But it's Netanyahu that wants to prolong the war. And Hamas saying we're going to do 1,000 October 7ths. Given the chance, but it's Netanyahu prolong the war. You know my 2 words, right? Up yours to the New York Times and the rest of them. They will kiss the arse of this communist wanting to be mayor in New York City who hates Jews, hates Israel, has curry. Him and his father have talked about Hamas as victims and freedom fighters. And the New York Times and others make nice. But somebody who leads a democratic nation, the bad guy. Do not forget this, because all of their reporting is biased and sucks when it comes to politics. And it's a shame because the New York Times has some darn good journalists that report on other things. Now that we got rid of the negative, let's talk the positive. You know, a few years ago, I had a chance during the big fundraising event for the Boys and Girls Clubs of Central Florida to sit next to a woman, the mother of Shaquille O'Neal, who lives in Orlando, Florida. You know, Shaquille O'Neal is from Orlando, lived here for a very long time. And I thought I was sitting next to an angel. You ever just get that feeling when you're somebody? She just had this aura about her. And for half the time she was talking about her son and what a wonderful man he is. Didn't even talk about basketball, just the things he does for people and others that they don't even never even publicized. Let me give you visionary minds. Shaquille O'Neal made $292 million in the NBA, but he made far more after he stopped playing. Instead of blowing cash, Shaq bought franchises. Today, his business empire is worth over $400 million. Here's how he became a silent franchise tycoon. He knew fame wouldn't last, so he did what most athletes don't do. He prepared for life after the game. First big move, bought 155 Five Guys locations. That's 10% of the entire chain. He didn't stop there. Auntie Anne's, those are those Great smelly pretzels. Papa John's, 24-hour fitness and Krispy Kreme. He spent his money across many brands with everyday demand. Why franchises? Simple, built-in systems. He didn't need to reinvent the wheel, just fuel the engine and collect returns. Shaq once said, I want to be rich forever. Franchises gave him cash flow, not just paychecks, but passive money. He also became the brand with his endorsements, but he took it further, investing in the companies themselves. He joined Papa John's board, bought a Krispy Kreme store, and made sure the deal's at equity, not just ads. But here's the twist. He doesn't brag. He moves in silence, stays goofy on camera, and builds quietly behind the scenes. While other celebrities flex watches and jets, Shaq owns businesses that print money. That's a different kind of wealth. He now owns his own shoe line. And by the way, the story behind that is somebody told him that he was going to do a shoe line that charges too much. He came out with a sneaker line that doesn't charge a lot. A movie theater, 150 car washes, 40 gyms, 17 Auntie Anne's, and as I said, 55 Five Guys. Most people see him on TV and thinks he's just a retired athlete, but he's a ruthless investor, calculated, patient, strategic. He reinvested like an owner, not a spender. He stayed in his lane, food, fitness, fun, and built an empire while staying lovable. He mastered the game of leverage. He used his fame to buy assets, then let those assets grow. Money without the spotlight. The lesson, build quiet, think long, don't chase trends, buy businesses that last. And by the way, very philanthropic. Very. I've seen stories about him where he met people. He's in an auto dealership and he finds out some people can't afford this and that, and he hears their story and writes the check for the rest of the car. I've seen that. He's done that. I saw him pay off a house for a woman that was going to be foreclosed. He's done that. No wonder I was with his mom that for 3 or 4 hours, she could not stop talking about him. And not one time did she mention basketball. Just what a great man he had become. I love that. And by the way, he's funny as all hell. And by the way, I met him once in an airport. Boy, he's got big feet. And he is big. Leave no doubt. Anyway, that is a little bit of Visionary Minds. We're going to keep doing more and more of those. And I keep forgetting to do them every day because I got about 500 of them. It's just lessons of greatness. People who beat the odds, created, produce, unlike everybody in D.C. that are a bunch of Hoover vacuums. Anyway, have a great evening. Drive carefully. Tomorrow and the next day are going to be a little bit on the interesting side. Watch the dollar, watch yields. And when you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You'll feel better. I promise they will be well. And I don't have TDS. We just call balls and strikes here. And we will continue to. Have a good night, everybody. Peace out.